Hello and welcome to this renting shares case study. You know, when I first started out in this business, it wasn't until someone took me through and actually showed me a physical trade that I really began to understand how the renting share strategy worked. It's an alien concept, was to me and maybe to you. So the objective of this case study is to actually show you a trade and so you get a better idea of what it's all about. Now, before we get started, just make sure you've checked out the blog and reviewed the renting shares level 1, level 2. This will bring you up to speed with where we're going to be at in this case study. So check out these two. Make sure you have an understanding of it before you get going further in this case study. So, welcome to my renting shares case study. In this case study, we're going to let you look over my shoulder as we go through the renting shares trade from start to finish. We're going to start with stock selection, obviously, good place to start. And we're going to review the stocks to pick and which ones not to pick, and of course some impacts of dividends, etc. We're then going to look at our entry point, very important in any trade. Not as important than if you're doing day trading, but still nonetheless very important to pick the right time to enter a trade. We're then going to execute our trade and monitor our progress, and I'm going to show you a really good tool for doing this in a moment. We're going to review along the way our exit options. Now this is an important one because this is the decision points you need to make along the way with your trade. And you need to know what the options are and the impacts of each option. So we're going to go through those in some detail. And of course at the end of the case study you should have a very good understanding of how the strategy actually works. So let's get going. Firstly, the legal stuff. This information is for educational purposes only. It is not intended to be any sort of financial advice. If you want financial advice, you should seek the services of a qualified financial advisor or broker. I am not a licensed financial advisor. Okay, so with that out of the way, let's just do a quick recap of the strategy itself. Renting shares, also known as covered calls, is a cash flow strategy. It generates cash from the stock market in a passive way. What we do is we sell a promise to the market that we will sell our shares at an agreed rental price by the end of the rental period. And when we do this, we receive a rental income, or premium as it's called. So we basically get cash for selling a promise to the market. We receive this premium the day we make the trade, and it's ours to keep. We never have to give it back. And every time we rent our shares, we effectively reduce our buy price of the stock because we're getting cash, and that cash goes effectively against what we've paid for the stock itself. So it's in effect a risk-reducing strategy. And we'll go through the risks as we go through the trade as well. Now, obviously, if the stock price rises and we're asked to sell our shares, we're happy to do so because we're forced to take cash from the market. Now, this is a really critical part of income investing as opposed to a buy and hold strategy. We're talking here about a buy and rent strategy. Now, don't get too worried about the fact that you may lose out if there's a big price rise and we're asked to sell our shares and only get part of that profit. The reality is we're getting cash from the market every time we do it, and if the price does rise sharply, we should not be concerned because we've banked a real cash profit into our account. And I can tell you from experience, a small real cash profit is much better than a large paper profit. And those paper profits, as we know, can vanish overnight. So this is the beauty of this strategy, that we're actually forced to extract cash from the market, forced to extract profit along the way, as opposed to a buy and hold where it feels really good with the stock price has risen a whole lot, but then all of a sudden it drops again. This avoids that mistake. It avoids the gamble in the stock market. So now, selecting the stocks that we want to rent. First and foremost, this is an investment strategy. It's not speculation. We use good quality stock. That's blue chip, large stocks, the biggest companies on the stock exchange, the ones that have been around for a long time. We buy value stocks to rent, i.e. those that represent good value for money. They must not be overpriced. So, any good broker would be able to give you advice on what are the value stocks that you can use, not only to buy, but also then to rent. You can use any number of stock reports, stock picking services, or brokers to help select our stocks. Or we can do our own analysis, and we'll go through a little bit of analysis as we get into our case study. When we choose stocks to rent, though, remember, those that with little price movement are said to have low volatility. Low volatility stocks generally have lower rental returns, and that makes sense because people are paying you to rent your shares in the hope that there's going to be a big price rise. If the stocks are very stable and don't go very far, of course the rental premium that you get is going to be less. So we need to work on a balance between volatility in the stock and the stability of the stock. Now, more volatile stocks will generally have a lower dividend payment. We shouldn't forget dividends because they're cash payments too, remember. But the rental income you'll get from renting your shares is potentially much higher than the dividend. So I generally go for more volatile stocks to get more rental income. It's a bit of a balancing act. For this case study, I'm going to look at the tech sector. Tech sector's got pretty good volatility and it's pretty heavily traded. So the rental premiums are usually pretty good. Now, at this point, you've chosen a sector, and as I say, we're just going to focus on the tech sector for this particular case study. You might choose a few stocks within that sector just to study, to get an idea of which stocks are good value, and hence which ones to buy to rent. And of course, if you already own stocks, you can also just rent those out, the ones that you already own. In this exercise, we're actually going to buy the stock and then we're going to rent it out. And for this particular case study, we're going to use Microsoft. Right, now we're going to go and get stuck into a trade, and I'll show you how this renting shares strategy actually works. We're actually going to do it in a couple of steps. This first session we're going to look at the stock selection, and then next session we're going to look at the renting of the shares and tracking our progress. Now, to do this, we're actually going to use a stock market simulator. We're going to use iTrader, and iTrader is really great for practicing our income strategies like renting shares. So let's just go and open that up here now. Now it's a little bit large for our recording window here, so I'm just going to make it a bit smaller so we can see. Right, now the way this simulator works is effectively you've got all the stocks on the left hand side here you can select from. This is the chart area, and it's got a normal price chart and a volume chart below it. You can add indicators to the chart to do your technical analysis. Now this up here is the master date for iTrader, and basically the date that you are trading at is set by this. So you can see this very first candle is the 14th of November 2012. That's where the master date is set at, and we can go and change that to be whatever we want it to be. So we're now trading at the 12th of December here. Now, once you've selected a date, you then just go and make your trade, so either single trade or combo trade, where you trade options and CFDs and stock. We're going to use this for our renting shares strategy. And then once you've done your trade, you can step forward and watch your trade and monitor it, and effectively it's a really fast way to learn and practice these strategies, particularly good for the income strategies that we've been talking about. Now for this trade we said we were going to use the Microsoft stock. That's on the NASDAQ exchange, so let's just go and load that stock. So here's the Microsoft stock. And in terms of deciding when to do our renting share strategy, there are loads of different ways to pick that time. They can be as complicated or as simple as you like, and in my view it's really best to stick with simple. And for this case study we're going to use a very simple trend line analysis, and to do this we simply click the longer term view. Actually I might just make this a bit bigger, it's just a little bit small for us to see. I actually want to go and show all data. So now this shows us the data starting from March 7, 2011, and we're showing it right through now to December 12, 2012. Now on this chart I'm then going to add a long-term trend line, and you do that just simply by picking up the bottoms of all the candles to give us, oh, I can't quite make it there. Okay, that's close enough there. Alright, so that's the longer term trend for this chart. As I say, that's just simply picking up the bottoms of the stock, and we can see from here there was a big price rise, but we can see the stock is starting to return back to its longer term trend. Now what this means is that the stock price is actually coming back towards what the market considers to be a fair value. Stocks often return back to their longer term trend, and we can use that as a good indication of the stock price returning to fair value. If we then flick back to our short term view, 3M meaning 3 months, so this is a 3-month view, we can see, and if I just move that up a bit, we can see that the stock is returning back here and getting very close to its longer term trend. The other thing that's clear in this short-term view is that this stock has bounced a couple of times here, just above the 26, probably that's 26.50 I would say. So again, that's a good indication that the stock has come back down, it's returned close to its longer-term trend, and the market then has bounced it off this support line here. And if we can see some pattern here, if we can see that it doesn't fall past this support line in the near future, then that's a good indication to us that it's a good time to buy this stock. Now the other glaring thing that's obvious with this stock price chart is this big gap here. There's a big gap in price, and this is where the stock price has just fallen sharply overnight, and a lot of volume too. So something's gone on here. And before we enter a trade here, we'd want to know really what was the cause of this, and we can get an idea by selecting the candle, the appropriate candle, and then going to the news archive. And this news archive gives us the news news articles that Microsoft's mentioned in at this date, and that was the 13th of November that we were looking at. And these are all the articles that Microsoft has mentioned in the news archive. And if we go back to this very first one, we can see a major loser on the NASDAQ today is Microsoft Corporation. The maker of Windows operating system is falling following the departure of Steven Sinofsky, president of Windows. Okay, so the reason for this big price fall in Microsoft is the departure of the president of Windows. Now, what we need to do is ask ourselves, is that a significant long-term issue for the company, or is it more a short-term knee-jerk reaction? I'd suggest to you that the departure of one person is more of a knee-jerk reaction and not a systemic problem with the price of the stock. So I wouldn't be too concerned with this gap down in price here, and I wouldn't let it influence what I do in terms of picking this stock and the entry point for a particular trade. So I'm going to ignore that for now. I'm just going to though step forward in time and just see what happens to this stock price, just to make sure that it's got some more support here at this lower price point here. And if it has, if we get some good indications, we'll then go and buy this stock and then rent it out. So let's go and do that now. Let's step forward one day at a time and just monitor what happens. And this is the process you would typically go through. As you're selecting any stock to trade, you'd watch it for a little while just to make sure it's doing what you expect, and then pick a time to actually go and make a trade. Okay, so it's bouncing back up a bit here. It looks as though it's actually going to be starting to channel between this kind of price point and this one here. So 26.50 to say 27.50. Looks like it's moving in between there. Let's just check it a bit more, just to make sure it's not doing anything strange. Okay, we're on Christmas Day here, so I probably wouldn't be trading around this time anyway. Let's just get past the Christmas New Year period and just see what happens. Okay, so it's bouncing again down here. We're on New Year's Day here at the moment. Okay, that's a fairly big price move on the 2nd of January. Let's just step one more and see what's happened. Okay, so It looks like it is really going to channel between these ranges here. So let's just use this as an entry point. We'll go and buy this stock and rent it out and see how we go with the trade here. Now to do that, as I say, all we do is select the combo trade button. But before we do that, we have to go and add an account, which I'll do. Let's call it demo for now. And yes, I'll add some cash to that account. Yes. Okay, that's our account down there. Okay, now let's go and do this trade. Now again, I apologise for the cramped nature of this window. So the strategy, we're going to use the renting share strategy, as we've said. And if we just take a moment to look at this, current stock price is $27.25. We would go and buy this stock at a market price of $27.27. That gives us the stock that we want to then rent out, and we rent it out using the sale of an option contract. It's a call option we're going to use, and remember, this is not options like option traders do. We're not buying and selling these options. We are selling it to produce income. So this option leg is our income producing leg. It's going to be a call. Now the rental price, or the stock, also called the strike price, so the strike price is the technical term for the rental price, is currently set at $27.50. We can choose any rental price that we like. If we choose a higher rental price, though, the amount of money that we get, the rental premium, is actually going to reduce. So I'm not too unhappy with a $27.50 rental price, given the current stock price is $27.25. Okay, so our rental price is $27.50. The rental period is determined by the expiry date. Okay, so the strike price defines the rental price, the expiry date defines the rental period. And if we just take a look here, the expiry date for the February contract for this rental agreement is the 15th of February 2013. Okay, so if we were to rent this stock out, we would be renting it through until the 15th of February 2013. And the rental premium that we receive is determined by the price. Now this is 68 cents per share. Now, one option contract is worth 100 shares. 4 option contracts is worth 400 shares. So by selecting 4 here, we would be renting out all 400 of our stocks that we're about to buy. We would then receive 68 cents per share, or a total of $253 for all 400 shares that we would rent out. So let's just make sure we understand all of those things first of all before we go any further. Firstly, the rental price equals the strike price. The rental period equals the expiry. And in this case, 15th of February 2013. The rental premium, or the rent that we get, equals the price of the trade. In this case, 68 cents per share. Now, one option contract equals 100 shares. Oops, 1,000, that should be 100. Okay, we're happy with that. Let's keep going forward. Now, we've chosen, or iTrader selected 400 here. I'm going to make that for this particular trade 2,500 shares, and to rent them all out means that we need 25 contracts, rental contracts. Okay, so the price of the stock is $68,000. We're going to buy that, and then we're going to receive $1,700 in rental income from renting those stocks out. Now, before I execute this trade, I just want to make sure that, absolutely sure that we all understand what's happening. So let me just go to the whiteboard and just review what we've got here. Okay, so the current date is the 3rd of January, and we're about to buy 2,500 Microsoft stock at $27.27 each, which will cost us $68,157. We then go to sell 25 contracts, meaning renting 2,500 shares of the Microsoft stock using a call option at the $27.50 rental price or strike price for the February 13 rental period or expiry date. For that, we're going to receive 68 cents rental income per share, or around $1,700 income. So this is the period of the rental agreement, 3rd of January to the 15th of February. Now, the two scenarios that could happen here. Let's look at the two scenarios so that we understand this. First scenario, stock price could stay below $27.50. So this is the $27.50 price point here. If the stock price stays below it, tracking up and down, and stays below that price up until 15th of February, then we'll get to keep the rent, as we always do, and we get to keep our stock. So nothing further happens. In that case, the return is the $1,700 rental income divided by the price of the stock minus our rental income, to give us our effective return of 2.5% for a period of 5.5 weeks. And if you annualize that, that's a 23% annualized return. Now, the second scenario is if the stock price rises and it goes above the $27.50 price point by the expiry date. If that happens, we again get to keep the rent, of course, but we'll then have to sell our stock. Now, if that happens, our return is the $1,700 rental income plus the $575 profit on the sale of our shares. Remember, we bought the shares at $27.27 and we'll sell them at $27.50, which gives us $557 additional profit, and then we divide that by the $68,175 minus $1,700 to give us a 3.4% return, or 32% annualized return. You need to exclude brokerage from that, of course, though, as well. So that's fairly healthy return, and I've got to say, this is on the low side of what you would normally expect by renting your shares. So I'm taking a very conservative view in this case study. You could fully expect to get those sort of returns when you rent out your shares. Now, of course, the other thing besides just a very healthy return when you rent out your shares, we've always said along the way that renting your shares actually reduces your risk. And the way it does that in this example is that our break-even point has changed. If we just went and bought the stock at $27.27, our break-even point would be $27.27, i.e., if the stock price fell to anything below $27.27, we'd be in a loss situation. Whereas because we've rented our shares out, our break-even point has dropped to $26.59. That's a 2.5% downside protection on our stock. So not only do we get income, we also get protection on the downside, which is why this strategy is so good. Okay, let's go back now to our simulator. And we're now going to execute this trade, and then we're going to watch it as we track forward in time. To do that, we just click the execute button. We are asked to confirm our trade, that we're happy with it, which we are, and we'll go and do that. And if I just go and turn the trade settings on, we should then be able to see here are the two trades that we've just done. We've bought the stock and we've then gone and rented those shares out by selling that call option. So I'm just going to turn that off again. And if we go and look at our account, we can see here are the two trades here, and we can go and look at our transactions. See, that's the original deposit, the buying of the stock, and then the renting of the shares here. So I'd like to leave it there for now, for this session. I know there's a lot we've gone through. Perhaps you'd like to just review those numbers again, or just review the video again. Next in the next few days, I'm going to come back. I'll send you an email, and hopefully you'll join me again. And we're then going to step forward and watch this trade unfold. And I'm going to talk you through the thought processes of the various options we've got in terms of exits or letting them run. So I hope you've enjoyed that. I appreciate your time, and I'll see you again in a few days. Bye for now.